In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto.
Question everything, trust nothing. It's your boy BlockchainCrusader here at Debate Crypto. And guys, we got a special episode for you guys tonight. We've got Christopher Inks. How's it going, man?
Oh man, it's going great. How are y'all doing?
Awesome, dude. I'm super excited to talk to you. Right, I saw your intro, saw what you're up to about trading, psychology, and how it all applies to the markets. And no better time than now, right? With all the things that are happening, federal rates going up and down, all kinds of crazy stuff. The stuff happening with Ukraine, FTX crashing, right? So there's definitely a lot of psychology going on people being scared in the markets right now. So you're the perfect person to bring on the show tonight and talk about this and talk about how people need to prepare their minds for these psychological swings in the markets and how they can prepare themselves to, be more, I guess, profitable, more smart in their trading mentality, right? It's not about financial advice, it's just about preparing your mind for it. So if you guys haven't smashed the likes, smash the likes, guys. And if you're interested in what Christopher does have his own channel, so make sure you follow the links down below to his channel. Go shoot him a follow if you're not following him. But I was gonna do a quick little market overwatch, but man, the market's not moving. Bitcoin is still at 17,000. It hasn't moved an inch. There's nothing to be really talking about in the markets in Bitcoin right now. So I just want to get right into it. Give the people an intro, who you are, where you've come from, how you've gained all this experience as a trader. So go ahead. The floor is all yours.
All right, great. Yeah. So, man, I'm old. I've been around for a while. I'm just a few years shy of 50 now. I've been trading for, since 1995. So was that about 27 years?
Wow. Awesome.
Man, and so I decided, and this is even before AOL did its whole unlimited dial-up. I don't know if anybody listening is old enough to remember that. But before that was really a thing, and I decided, man, oh man, I got to do something. I was raised in the military. My dad had this, this big thing. He ended up being senior chief. He said, hey, listen, these young guys, they don't understand. They have to respect, they don't have to respect me as a person, but they have to respect my uniform, my rank. And so me growing up in that never stood well with me. I was always like, man, I can't sit here and listen to some guy who doesn't know what he's talking about telling me what to do. So I said, okay, so what do I need to do to do something other than end up in that life? And I figured, okay, got to be an entrepreneur, got to make some money somehow. And then of course, go on to trading. Trading is a huge thing, even back then. And so I started out the first probably 3-4 years or so. But man, oh man, I was like pretty much every new trader out there, lost a ton of money. Life sucked as a trader. And I finally got to the point I said, man, I'm tired of losing this money. I don't want to work for somebody else. What do I have to do to be successful? And that's when I finally took charge and I went in there and started becoming a student of the market, started learning everything, absolutely everything I could about everything that was related to the market, fundamental, technical, all that. And so I've been doing that for, like I said, 27 years here now. I started trading stocks back in the day and moved on to Forex. And then in 2017, beginning of 2017, I jumped into crypto as well. Forex is still my favorite market. But yeah, I've learned a lot over the years, as far as, how and why markets do the way they do. I mean, I was coming in there right before the dot-com bubble. And then we had the great financial crisis. And then, of course, we've had a few crazy things every once in a while with FX, Forex. But then you get into crypto, and every bear market is some extreme thing. Right before I got in, there was Mt. Gox, and then we had end of 2017 was the the all-time high there, and we came back down, and then here we are coming down again, and we've got all this, Three Arrows Capital and over-leveraged greedy and Voyager and Celsius and all this stuff coming in. And so along the way, I picked up a few degrees. I'm just one of those guys that likes to learn. One of my, I've got a few, like a law degree and a few master's degrees. And one of those master's degrees is actually a master's in applied psychology with a focus on applied economic psychology. And so that just happens to work really well with my, decades of experience in trading. It's helped me really refine what may or may not be going on in people's heads when they're trading. So, yeah.
For sure, right? Because trading, the majority of it is controlling your emotions, right? It's risk and mitigation, but at the same time, people get very emotional, right? A lot of people like to paper trade sometimes before they actually do trading, but the emotions aren't really there because you know that the money isn't real. So
Yeah.
you're willing to take higher risk, and sometimes it pays off or it doesn't, but the emotional battle isn't happening. And then when you actually get there with real skin in the game, it's a whole different ball game.
Yeah.
So the fact that you have studied psychology, have a master's degree in applied psychology, and you've lived it through it all, right? Like you said, the dot-com bubble, the 2008 real estate bubble, right, when the markets tanked again, the Mt. Gox scenario, the 2017, 2018 scenario for cryptocurrencies, and now this one, right? Now it's bigger than ever, all kinds of over leverage. So for the person that's trying to get into trading right now, how do you navigate what everything that's happening? How do you navigate a clear mental state to get into the trading game right now?
Yeah, so I think the first thing is, when people first come into trading, and it seems like lately I've been asked this question a bit more, and I think it's because, we've continued to do well even with the market coming down. And the thing is, okay, well, are some people special? Are some people, do you maybe have to have, these degrees? Because I have, degrees and whatever. And really, you don't. You honestly don't, guys. I've talked to thousands of traders over the last couple of decades, and some of my favorite trader friends actually have barely graduated high school. I had one that didn't even graduate high school, dropped out like 10th grade or 11th grade. And he lives the lifestyle most people coming into trading imagine that they're going to be in the next year, right? Yes, he's got the really nice house, the multiple homes, vacations all the time, very high-end cars. So, the thing is, don't take it because I have degrees that, that you need that. You really don't. What you need to honestly do is have a ability to be humble and a desire to actually learn, because we all come in with this idea, and it's practically everybody comes in with the same idea of how they think markets work and how great it's going to be. And they all always come in at the top. And then of course, the statistic is like 94-95% of people are out within the first 90 days. They lose everything. And sometimes they're putting in more along the way. And so the idea is just to come in and go, okay, I probably really don't know what's going on with the market. So I really need to learn how and why markets move the way they do. And the second thing beyond that is you really need to have proper risk management. I say it all the time. The most important thing you'll ever do as a trader is proper risk management. If you can't do that, and this is me talking to thousands and thousands of traders, successful traders and non-successful traders over the last few decades, there's just no way you're going to go and do this for a living, And that's why we come in, right? Everybody comes in because they want to make money.
For sure, right? So my question is, right, for people who are trying to get into trading, a lot of people like to jump in and they have to try to get a certain amount of money per day, right? Like you see a lot of people on TikTok or a lot of these gurus, if you make $274 a day, right, a year, then you're making 100K plus, yada yada, right? So people get into the mind, if I can just trade and get $274 a day, right, I can make 100K at the end of this year. How long do you actually trade? How long do you actually sit for? Are you trading all 8 hours or all 24 hours of the day, all crazy times? What's your schedule like?
Yeah. So, I mean, the first thing to understand is trading is a marathon. It's not a sprint, guys. So we all come in wanting exactly what you just said, income every day, whatever, get rich. We want to make $1 million. We want to start with $10 and be a millionaire last week. And that's what we all do when we first come in, and so we can forgive ourselves and go, oh, okay, we're not special. That's fine. Now we can forgive ourselves and say, okay, well, now let's buckle down and learn. Again, it took me like 4 years to get to that point, right? But yeah, so when you come in with that, I mean, the biggest thing to just understand again is that it's a thing that's going to take time, right? And so if you understand that not every day is a tradable day, okay? So what I often talk to, not just the members of our group or whatever, but when I do my live streams and everything, I always try to remind people, you don't want to enter just because there's a chance. Because even if you use proper risk management, you're still going to lose money a lot of times, because most of the time when it's just a chance, it's a bad trade. So you want to look for higher confidence entries. The problem is when you look for the higher confidence entries, that means you're not in and out of trades all day long. And for newer traders, they get frustrated. They either trade because they're frustrated, nothing's happening, or they're trading because they're scared that they might miss something. So yeah, the first thing is to understand that not every day is going to be, especially the newer you are, you're going to have a lot less really tradable days. And so for me, myself, it depends on what stage the market's in. When it's aggressively moving, I'm usually just in a swing trade for a while and just let it take it with it. Over the last, 6 months or whatever, since June, I've done a bit more day trading, just because it presents itself with the, with the range we were in and the drop, and then the range locally now presents a lot of opportunity to make money. So it really just kind of depends on the, on what the day happens to be.
So you do a lot of range and volume profiles for trading, right? That's kind of your style. You don't do a lot of like trend lines, or do you combine all these things together? What's your trading style like?
Yeah, so like I said, everything I do basically it begins and ends with price action and volume, and that hangs with me from Wyckoff, because one of the ways in which I trade deals with Wyckoff, which deals with ranges and accumulation and distribution, and understanding how price action and volume within that range determine what's likely to happen. And so a lot of people get out of just price action. The problem with just price action is you miss that volume part of it. Right.
Yeah.
So for instance, if you look on the monthly, say for Bitcoin, and you have the June drop, right, that capitulation there, on the BLX, that's something like, I don't even know, $18,000 candle body on that. And your volume's right around 1 million. And then if you look at the drop that we just had, your volume's actually like 1.2 or so. It's a bit more, but your candle spread is only like $3,300. So what that tells us, if we're looking at it, is there was a lot more effort put into this drop that we just had versus the one in June. So a lot more effort, but a lot less result, because again, the one in June had like a $12,000 candle spread, and the one we just had was only like 3,300. It's like a quarter of it. So you're doing, 10, 20% more volume, but you're only getting 25% of the result. And that's important, because what does that tell us about what's going on with the market? Well, it tells us that demand is showing up much, much, much stronger at the recent drop than it did back in June. And so when you look for psychology and what's going on, what you look for is a trend that's taken time. By the way, we topped out in November of 21, and then we hit the low so far in November of 22. So exactly a year down. So we've got this long trend down. We've got demand showing up substantially. We had recently, we talk about psychology here, right? We had recently, just the other week, everybody all concerned about Genesis. And then this gets into a whole big old thing on Twitter, crypto Twitter, about how GBTC was going to collapse. They were going to, sell everything out, and all that was going to come in the market and all this. And what happened instead? They rallied up, 10, 20%, something even more. I don't even remember. And as a matter of fact, Bitcoin itself rallied too.
Yep.
Opposite of what everybody thought was going to happen, right? So, again, the thing is, when you have your bigger players in general who tend to accumulate. So a lot of times traders will wait for a bottom, and they think that retail's getting into the bottom. Retail won't get in until it's pretty close back up to the top. And you can see that in the volume that comes in, right? So along the way coming down, retail gets to those levels where they capitulate. And we've had like 3 capitulations that have been tied with what's going on. We had May, which was 3 Arrows Capital going down. We had the contagion from that with Voyager, Celsius, and all that in June. And then we had just recently now was the FTX thing that brought us with this, this 15,000 low or whatever. But like I said, a lot more volume coming in, but significantly less result. And so you have the selling coming in, you have the buyers buying up, but the buyers that are buying up are your larger players. And it's not retail, because retail doesn't call, you don't have Jim calling Joe and say, hey, get Joanne and Shelly and Chris and everybody else, and let's all get together and buy at this one level, right? So you have retail with very small pockets, basically. So they don't do a lot. But you have the bigger players who have significant control over significant assets, whether it be dollars or Bitcoin or whatever, that can initiate these big levels of sucking up all that supply coming into the bottoms, or giving in all that supply at the top. So, when we come into it, generally what retail is thinking is not necessarily the way it works. And so then when we're down at the bottom, retail says, oh, it can't possibly go up. It's got to go down further. It absolutely has to. So there's technical levels lower for Bitcoin right now. You've heard them, and you've had people on your show, and they've talked about technical levels, and they're legit levels. But the question is, does it have to go down? So price only has to do whatever it's going to do. But what we know is when we get toward the bottoms, we start having these things I was talking about on the weekly and on the monthly with the volume and price action. They don't guarantee that a bottom's in, but these are the things we look for when we say, okay, a bottom may be performing, because the bottom is an event, the bottom is a range, not an event. Retail often talks about the bottom, but they're talking about the event, the absolute lowest price. But the bottom itself is this thing happening. And so, it looks right now like there's a good possibility that the bottom began in June. So we've had 6 months of bottoming already with what we just come down as a terminal shakeout. And we'll see if we can rally back up, which we should. End of December, maybe into January, should rally back up toward 20,000 or more, get back in that June range.
Interesting. So talking about the bottom, talking about the psychology, right? When we were at 69,000, right, everybody psychologically was saying 100K, like this is going to happen, right? All the fundamentals, everything was there telling us that 100K. No doubt in my mind, right? I was one of those people. I believed we were going to hit 100K because of the fundamentals. I'm not a trader though. I just dollar cost average, and I look at the fundamentals. Now we've gone the opposite way, right? Yeah. We've hit 30, we hit 20, we've now hit 15, and now everyone has been super focused on 10K or even lower than 10K, as in like this has to happen. Everybody prepare yourselves. I am a believer that will not happen. That is the equivalent of the 100K mentality, that it had to happen. We need to go to these lower levels. But there are some technical reasons to be there, right? There are some untapped yearlies, untapped monthlies, and all these other technical terms I can't recall right now, which from how you're talking, your trading strategy is very similar to leading crypto and magic internet money, which we have them on the channel quite often. So you guys would probably like sync up perfectly. But so my question is 10,000 or lower, is that a psychological level of equivalent to the 100K, right? Because you've also said that we've already been ranging at this bottom, right? We had a capitulation with the FTX, which I do believe the only way we would head lower is if some type of black swan event, some big thing happens. But BlockFi went bankrupt. The whole thing with Genesis came around, and people are kind of becoming numb to this, like these crypto companies going down. So you've mentioned that we've been ranging at this bottom level already. So 10K, what is your opinion? Is that the equivalent of the 100K or no?
Yeah. So I mean, exactly. Yeah. So when we were getting up toward the top, the first top there, around 60,000 or whatever, back in that April 21, on my live stream, I said, listen, everybody is all the crazy laser eyes or whatever, and they were using real weird terms like spaghetti fingers and stuff like that. And I said, this is what you're looking for when you say, okay, is there irrational exuberance going on? Is there euphoria going on? That is actually what you're looking for. That was like just about everybody. Everybody had their profile picture with their eyeballs, lasers.
When everybody's talking about crypto, right? You're in your Uber,
exactly.
Your waiter's talking to you about crypto. You're like, man, everyone knows.
Yeah, and so I said at the time, I said specific. I said, listen, this is a top. It doesn't have to be the top, and I think we've probably got a larger top. But I said this is a top, and I said we're probably going to pull down, pretty much where we went. And so the way I approach it is with trading is, okay, listen, we've got ideas because I use Elliott Wave as well to get projections, and so I say, okay, well, listen, there's the possibility that we could be doing this. So I was one of those ones that also said potentially we could be hitting 94,000, maybe 150 if we go up, but we have to do this breakout higher, right? And I was saying that after we had topped out at 69 there, because in Elliott Wave, Elliott Wave is great because it gives you this confidence, because you understand that the market isn't actually random, right? That human beings actually do things in predictable manners, and so the market does things that are in predictable manners. Does that mean you're going to get it right all the time? No, because you're a human being. You can't possibly know, this decision tree. You got a decision, yes or no. You take yes, and then you get another decision, yes or no. So there's all these other decisions that come in there, right? So what we do as traders is that we say, okay, well, listen, here's my narrative. I think it could do this based on this. Here's my validation level. Here's my invalidation level. If it breaks out the validation level, I'm more likely to be correct than not. If it breaks down below the invalidation level, well, then I'm less likely to be correct. And here's our next target to the downside. So as a trader, it's not like, okay, yeah, we're definitely going to 150,000. That's it. It's like, okay, I see the reason we could do this, and here's what we do, but we have to do this. If instead we do this and we go through this level here, then that means this other situation is potentially playing out. And so we look for a target here and we look for a target here. And I think, again, as far as new traders coming in and all the emotion they have in it, all of them, they come in and they want guarantees and they want absolutes. The only thing that's guaranteed in trading is you're going to lose sometimes. You absolutely have to master risk management. It's the most important thing. It's boring. It's not sexy. That's why most people don't do it. But it is the one thing that makes your bank account sexy. You may go, man, that's a boring trade and whatever, and these are boring trades, and I'm making, on average, 1 or 1.5% a day, right? It doesn't mean you trade every day. Some trades are good, some days not. But, you go through a course of a year, you're like, man, make 100% a day. Well, but that turns your $10,000 bank account into, maybe 40 or 50,000 at the end of the year. That's sexy, right? It's just people don't want to do the boring stuff to begin with. But again, I think that's part of that whole thing you have to work through. So when we look at where we're at now and we say, okay, well, we've got that thing I talked about with the volume and profile, the volume, price action, and the range and whatnot. I think there's a good story to be made for there potentially being a bottom in, but we have to do things. We have to, we have to move a little bit more rapidly up into that range, up through that 17.5 level, up into 20,000 and get through there. If you look at market structure coming off the swing high, that 69,000, the last lower high that we had, that makes that bearish market structure coming down, which is just lower highs and lower lows. The last lower high we had technically coming down with that was that on Coinbase, what is that, 22,500, I believe. So, when you look at it from that manner, if we can break out above that, all of a sudden that bearish market structure from the all-time high is no longer there. It's been broken now. And so now we have bullish market structure coming off the low. Again, doesn't guarantee that the bottom's in. But, as these things happen, we just keep adding them to our book and going, okay, now it's more and more likely. And I think if you do that and you study that rather than just trying to say, well, it's 17,000, I'm going to put in a long YOLO it for, 200,000 or I don't know, ARK was saying, what's her name over there at ARK? Kathy Wood was saying $1 million or something.
Yeah, $1 million by like 2030.
Yeah, I mean, it may. And there's technical reasons to see that it could get there. But if you're longing right here, saying that's what you're going to do, and if it goes down and wipes you out, then it wipes you out. I mean, again, you're not doing yourself any favors. Spend your money on experiences. Take that money, go take a trip somewhere. Don't throw it in the market. Because people like me, we're going to go in there and we're going to take your money every day. And we're not going to feel bad because, listen, you got into the market. You're choosing not to learn what to do, right? I mean, it is what it is.
Yes. So another question, talking about, bottoms and the rate. You mentioned ranging here for 6 months now, since June to now, and the capitulation event that we've had recently. I just spoke with Gareth Soloway. I don't know if you're familiar with him or not. Just yesterday on TA Thursday. So guys, if you haven't smashed the likes, smash the likes. If you haven't catched yesterday's episode of TA Thursday with Gareth Soloway, go check it out. But basically, he mentions some similarities with the 2017-2018 model as well, where we hit a low in June, then we came back up in November. There was a certain time period. I'm paraphrasing here because I don't remember exactly. But basically, he is saying that he believes we are going to keep going lower for the next 6 months to around May-ish, June time of next year, before actually, starting to have that slow recovery back above. What do you think about that versus the range low that you currently pointed out that we're in right now?
Yeah, so that's pretty much. It sounds like pretty much the same thing most. I'm not even talking about just new traders, but friends that I have, that are of the mindset that it must absolutely go lower. That's kind of the same thing they're looking at, right? They're looking at that same kind of analog. They're saying, okay, well, in 2018 we had this, and I think we're here on that. It was the same thing people were doing with in 2018 with 2014 or whatever that was, 2013, whatever that was, the bear market back then. I'm not a big fan of analogs. It's kind of like when people say that, when people say, oh, stocks and Bitcoin aren't correlating right now. I'm not a big fan of correlations because it works and then it doesn't work. And I'm
Yeah.
my personal preference, if I'm going to trade, is if I'm going to do something, I want it because the odds are in my favor. If it's something that just happens sometimes or kind of, that doesn't help me out any as a trader, right? So I'm not a big fan of that. Now, the other part of that is I do have an extensive history with Wyckoff and, and with Elliott Wave. And what these two things teach you is your corrections are corrections, and corrections can take certain looks to them, but they're rarely ever the same. They're usually similar, but not the same. So if we look at that, and if we're looking for a larger move down, because 2018 had a larger move down, the problem with that is you get very emotional with that attachment. Most people do. And so when it doesn't do that and it continues to go up, they continue to make arguments of why it must go down. So a good explanation or a good example of that was 2018. We hit that 3,200 low, and I said, okay, it looks like we're probably done with the low here. I said, barring a move down below, we should be looking up. There's just no two ways about it. I'm not going to, as this thing's rallying up, I think we're going to take out 4,000. We're going to take out the 6,000 we're going to do. And so what happened? Well, most people were still talking about that. Oh, we got to get down. Like I said, I think somebody said 32 cents or something. We have to do it. The market has to do it. But what happens? It hits 4,000, that 4,200, that resistance, and everybody's like, oh yeah, now it's definitely going to go down. But it didn't. It popped out, right? Rallied on up to 6,200, 6,000 up there, which was that long base that they're trying to make the comparisons with here. And so they didn't go long. Instead, they continued to be. They were scared because they weren't sure what was going on, but they felt like it had to keep going down. And so it hit 6,000. They're like, okay, yeah, it's definitely going to go down here. Now we're going to get that move back down below 1,000, below 100, whatever. And I said, no, what we're going to get is we're going to get this. It's going to cut like hot knife through butter. It'll come back and retest and it'll pop higher. I said, because what happened was you have your buyers at 6,000. And what happens in that range, again, I'm not going to go, it's a lot of Wyckoff, but basically what happens in the range is by the time they got to the end of that range with those lower highs coming in, they were noticing the market was not ready to rally yet. There was still too much supply in loose hands. So they do this terminal shakeout, which was that drop down to 3,200 to just kind of clear out whoever was left that was going to sell. If you held on at that point, you're most likely not going to sell. And that's why then when they broke out to 4,000, it moves pretty straight up to 6,000, moves out, breaks out, comes back, rallies up there, toward that 12,000 range in June of 19. And so again, it's a lot of psychology in that, right? So within that range, what's going on? They're playing that range. The ranges are all about testing. It's all about testing supply and demand through the range. And the reason being is you want to get the supply off there for two reasons. One is you want to get it in your pocket, so that way when price rallies up, you've got more, right? The other thing is you want to get that supply out of the loose hands, right? What people call paper hands. And these are either people who don't know what they're doing, are going to get scared anyway, or it's even day traders like myself who go in there and we buy and sell along the way. You want to get that out of there because what that does is if you get it out of our hands, we can't keep selling into it, which makes it easy for price to move up, which is why you will then see price move up on low volume. Everybody's like, oh, where's the volume? How can this thing possibly go up? There's no volume, and it goes up because there's no selling coming in. The selling was already accumulated. And so this is that psychology part. So retail is down at the bottom thinking, oh my God, it's got to go lower. It absolutely has to go lower. There's no two ways about it. And so they're selling until they have nothing left to sell. They're like, I'm going to buy it lower. And it goes without them. And they're too scared to buy. So it pushes up with the larger players in it that are just kind of taking it up. And, retail then finally psychologically gets into it, usually at the top, usually at the breakout or the top is what they do with the big range.
So continuing on the psychology topic, right now, right, the psychology is very negative, right?
Yeah.
Crypto keeps going down. Exchanges and companies in the crypto space are all like, who's going to be the next one that's insolvent, right? The next interest rate hike, is it going to be higher? Is it not? How high is the interest rate going to go? And now everyone's psychologically tied up to this idea that if interest rates go up and the dollar for whatever reason strengthens, then Bitcoin and cryptocurrencies have to crash. They're going to keep going lower and lower and lower. All right. But that correlation has never really happened before until now. So are we being set up psychologically here, right, by institutional players, by, mainstream media articles about the crypto space being negative, so that the regular average person doesn't get in and the institutions are, packing their bags or getting ready to make big moves? or are we, or is the psychology correct? Should we be scared right now?
Yeah, so I'm not a big believer in the whole the world's against me kind of thing. In the stock market before crypto and everything, it was like, oh, Wall Street's stealing my money. We get to crypto and it's like, oh,
Yeah.
the whales are stealing my money.
Yeah.
And they're not stealing your money. You're just not learning how to trade. You're not taking profits when you should. You're not using proper risk management. You're over leveraged. You're not using proper position size. These are all on you as a trader, right? Now, the good thing about that is once you recognize that, go, okay, yeah, it is. Then you can change it, right? The problem is most retail traders don't want to admit that. They don't want to admit that they came in and they screwed up. I always put this question out there to people who are listening to me. I say, well, do you want to be right or do you want to be profitable? We'd love to be right and profitable, but I tell you what, if you ask me, I will be wrong every day of the week, every second of every day, if I could still be profitable. And what does that mean that means that I recognize before it gets too late that I'm wrong and I get in the right direction and I make money. But we have the psychology, and I think the psychology, unfortunately, for most traders is because on crypto Twitter and whatnot, they have this big, they feel like they have to be liked by somebody that has an animal picture and a fake name. And I mean, at the end of the day, the best advice I can give new traders is stop worrying about who cares. As long as you get to the point that you're profitable, that's all that matters. Because most of the people on crypto Twitter and whatnot and social media aren't actually trading anyway. They aren't trading consistently. They aren't really, a lot of them aren't even trading at all, but they talk like they are. And then you start feeling like you have to prove to them. You ain't got to prove nothing. All you got to do is work on yourself and what you're doing. So when we get to this point now, this bear market low, it's nothing different than any other bear market low. And that's in crypto, that's in stocks, that's in anything.
So you think that we are in the low, like we are, like, can you explore that idea more? Because you did mention it earlier that we're kind of hitting a low, and then into this in December, January, you're thinking that we're going to go a little bit, you're going to start moving back up higher. Can you explore out that scenario? How do you see that playing out and why?
Yeah. So, as I was saying, there, all the lows, at the lows, what you get is you get this depressiveness. You get this idea. You get people screaming that you can't. It has to go lower. There's absolutely no way it can go up. Contagion's going to happen. The Fed was clear. The big thing is, like you were talking about the interest rates. Everybody's like, oh, the Fed was clear that they're going to do this and whatever. And then, of course, we heard Jay Powell earlier this week, a lot more dovish than what he's been in the past. He was very hawkish before. Now he's like, well, it looks like we could start pulling back here in December. Now, everybody's concentrating on the word pivot. All you have to see is a slowdown. You had 75 basis point rate hikes all through summer coming into now, and now we get a 50, right? So we get a 50. Well, that leaves open the door to a 25. And so the market's forward looking. So the market takes that as bullish and to do it right now. So when we look at, okay, well, what's going on with Bitcoin? Well, yeah, if the dollar's going up, the reason the dollar goes up is because people are fearful. The dollar is the safe haven currency because it is the world's currency, right? It's 60, 70% of world's transactions are done in the US dollar. It's the reserve currency, right? So when people get scared, when they think the economy's, going to be bad or whatever, forget what the Fed says. When they're scared, they're going to put their money in dollars. And so that's why we see, then the dollar rally. Now, what that does is it puts downward price pressure on other assets, on risk assets. Why? Because they go from the risk assets like stocks and Bitcoin or whatever into, the non-risky asset, the dollar there, right? The safe haven asset. Now, depending on how the structure looks, there are times when you can see it show up. You'll see the dollar move up and Bitcoin move down. But a lot of times you'll see a sideways price action happening, like for say in the dollar, while Bitcoin continues to rally up because the dollar is corrective. A sideways price action, that you can learn through Elliott Wave or, Wyckoff, it's corrective. It's corrective. And so if it's corrective, then you could see it go sideways while, for instance, Bitcoin continues to go up. And then it would look like, oh, well, there's nothing going on there. The dollar's doing this and Bitcoin's doing this. But it's really just because as long as the dollar isn't functionally accelerating higher, it's going sideways or down, then that takes that downward price pressure off those risk assets. And so we see that. And so, again, so we get to this point now where we're at where everybody's very depressive and everybody thinks that, things have to continue lower, which they could. I am no way here guaranteeing that the bottom's in. We can't do that. These are no guarantees in trading.
For sure.
But if we can do the things that I believe need to be done as it's rallying up there, it makes it more and more likely that it is. But psychologically, retail will not get in until much higher. And so what does that mean in terms of return? That means they make half or less of what they could make had they been a bit more open and not so scared. But often the fear itself, the fear is of the unknown, right? And then if you're a trader and you don't really know what you're doing anyway, and you don't really understand proper risk management, then you've got that fear as well, because you don't feel like you have any control over what's going on. And so of course you're not going to get in. You want to get in. You see price going up. Man, it looks good. I want to get in. But what if it turns down on me? But you don't have a plan. You don't have proper risk management. And if you do, you're not going to, if you're using proper risk management, you're going to lose very little if it does go against you. Nothing that's going to make you, your rear end pucker or anything like that, right? So, I mean, it's this psychology that the way that people feel plays so much into it. And then the bad thing about it is when you get toward those lows or toward those highs, people tend to seek out that which echoes back what they think. So at the lows where they think it has to absolutely go low and have to do it, they want to be dismissive of anything that says it can't. And they're going to purposely look for those things that reinforce what they think.
Their bias.
Yeah. And so, and it doesn't help them any, unfortunately.
So you're thinking that the reason why we're going to start moving up in December or so forth is because of the slowdown of the interest rate hikes, and that would create a bullish sentiment moving forward, like you said, right? Opening the door to a possibility of maybe a 25, and that sentiment itself could start making Bitcoin slowly recover to a little bit higher price points. And if we do continue seeing that slowdown, Bitcoin's going to keep riding that wave up. Is that the gist?
No. Okay. So here's the thing. This is the way most people think. Most people think that the charts create social action. They think people look at the charts, and those charts doing its thing gets people to do things. The way I look at it is something completely opposite of that. It works extremely well. And the idea is that social mood leads to social action. So what the general thought is of what's going on, are the people generally happy, or are they generally not so happy? That's gonna show itself on the charts. All right. So how people are already in the charts. And so this is often I talk about that the news is in the charts. And what I mean is I don't know that, FTX was going to go down right here or whatever, or something like that. I don't know what the news is, but what I know by looking at this generally is that social mood feels this way. So price action should do this thing in response. And so, yeah, we're going to see the potentially the interest rates come down, right? The interest rate hikes come down, right? And then eventually it'll flip, I believe. But that's a product of what's already going on. The Fed is always chasing. It's always reacting. It's never proactive. And so what the Fed does is in reaction to what's already showing up in the charts, which is a reaction, which is just showing you what people already feel in the economy, right? So if you think about it, if people are worried in the economy, they're going to stop putting money into the stock market, or they're going to start doing shorts, right? And so that shows up there, and then that makes price reverse. It's not that price reverses and then they short. Somebody has to go in there and actually short, right? Somebody has to actually stop buying. And so businesses, when they feel like the economy is going to slow down, they slow down hiring, right? They don't hire as much. They don't produce as much because you can't have all this supply sitting in there and all this money lost in it. So people are this social mood that creates a social action, which is the chart. And then news happens to come through. And then we associate what's happening with the news with the price action. Even if the same news event can happen 2 days in a row and you get a completely different result, we'll find a reason to rationalize why it didn't work the second time around. But it's already in there. It's already there. And so and that's a difficult concept for most people to wrap their heads around. We're all used to the idea that, hey, the markets, the charts are going to tell us what's going to happen. But really, the charts are telling us what already happened. And I think that leads to, as we've been talking about here, that general psychological, especially retail side of it, at the highs and the lows, right? So they think, the chart's going to tell us it's going to go up. It doesn't, right? Or it's going to go down lower. It has to go down lower. And it doesn't. So, yeah.
Guys, if you haven't smashed the likes. If you haven't gone to go down below in the description of the video, go check out Chris's channel. It's called Texas West Capital, correct?
Yes.
And on that channel, do you do just stocks, or I should say forex, or do you also trade crypto live? What is your channel kind of about?
So really, my channel is a lot different than most people's out here. It's really about education. What I was just talking about, the way the charts work and stuff like that. It's a helping to explain global finance and global macroeconomics in a way that people actually understand. Because it's a dismal science. Nobody really likes it. Well, me, I like it, but
Yeah.
most people, because it's difficult. There's a lot of moving parts, and the idea is to try and simplify it enough so that when things are happening, people can be more prepared. So again, they're not here. They're not saying, "Oh, well, the Fed's made it clear they're going to do this." The Fed made it clear in 2020, in 2021, that they weren't going to do quantitative tightening until 2022, maybe. They weren't going to lift interest rates until maybe 2024. And back then in April or May on my channel, I said, hey, listen, no, they're actually going to do this. They're going to do quantitative tightening in November. I said, and probably start raising interest rates at the beginning of next year. And that's actually what happened, right? And so it's just an understanding that the Fed, whether it's because they feel like they have to say things, the biggest thing the Fed has going for it is actually its mouth. It's to get you to believe they're going to do things so you react without them having to do things. Because the Fed knows when they get involved, there's a lag effect. And Jerome Powell was actually talking about this last week. He's like, we haven't even recognized the full effects of all these real hard rate hikes that we've had yet. We won't see that for another few months in the next year. So if we continue raising it so sharply, we can well overshoot and do a lot more damage. It is what it is, right?
That's very true, right? Very true. The whole
So we do a lot of talk about that. I probably spend a more inordinate amount of time talking about Bitcoin than anything else, but we generally look at precious metals like gold and silver, oil, natural gas, stock indexes, the dollar. We talk about the dollar a lot because, again, that's that whole idea of you can kind of gauge what's going on with the other markets by paying attention to what's going on with the dollar. So it's a lot of that. And then it's a lot of, I'm a firm believer that how you are in life affects how you are as a trader. So I know, especially here in the US, the victim mentality is really big. We always want to blame somebody. The government tells us it's okay to blame somebody else. Well, the problem with it is we always have some sort of play in that, right? So one of the things I like to use is if you're walking down the sidewalk on the street and a car comes off the sidewalk and hits you, right? And puts you in the hospital, whatever. People want to be like, oh, I'm such a victim. It's all bad. And they're not wrong. It was definitely the car's, the fault of the driver for hitting you, right? But psychologically, we have to accept that we had some part in that. The decisions that we made in our life leading up to that point put us there. Yes. And if we can accept that, then we can accept, what happened. Instead, most people tend to just live in what happened and they can never move beyond. And so, it's an extreme example, but that's what we do. Most people do all day in their lives. And if you believe that you're always a victim, then you can't possibly believe that you can affect any change in your life, that you can do anything, right? But when you come into trading, you have to believe that you can make a profit. You have to believe that you can figure out where price is going and trade it effectively. Otherwise, why are you in there, right? Exactly. So a lot of people get that big disconnect between life, they're this way in life, and then they think they come in trading. But if you fix that one thing in life, it makes trading a lot easier.
Dude, 100%. I completely agree with what you're saying there. Guys, like I said before, if you guys are not following him yet, go follow him, right? He's coming out. He could be anywhere, but he's here tonight giving you this information about psychology, about how to be a better trader, right? And how, if that's the kind of stuff you're looking for, right? Now's the time to get educated. Now when the bear market is slow, right? When things are down, when things seem boring, it's the time to be picking up education and learning as much as you can so you can prepare yourself for when the bull market comes back, you can capitalize on that and make profits, right? And the way you're going to do that is by following people like Chris, right? Getting educated from people that have tons of years of experience, that have lived through the dot-com bubble, the 2008 crash, right? Mt. Gox, 2017, and even now, right? Has been trading this whole entire time, only getting better and better, learning life lessons throughout the journey that you can avoid by learning from him, right? Because you can do it on your own just how he has, right? But you're going to take a long time to get to where he is versus if you use more of a mentor and you learn from people who already have experiences, you can accelerate your growth of education and maybe avoid some of the bigger obstacles that they faced before because they didn't have someone like you do, right? So take advantage of that opportunity, join his channel, make sure you subscribe to him. Chris, any final words to the audience?
Man, I think, man, what you said there at the end about mentors, man, I'm such a big believer in it. Man, I myself, I even posted a tweet today on my Twitter channel, Twitter feed there. But I looked at it, and I've actually got 3 mentors myself. So even though the success I've had and what I've had, I'm a firm believer that if you want to learn something in the quickest way possible and miss as many mistakes as possible, which usually ends up costing you a lot less, mentors are the way to go. And so I've spent $67,000 this year on 3 different mentors to do with my personal life and my businesses, because I believe that that's a big thing. And so I think, like you said, man, you can go out there and you can learn to do things on your own, but it is definitely going to take you longer, and it's definitely most often going to take you a lot more money. And so if you're looking at investing or trading as a way to increase your wealth in a shorter period of time, then it makes a lot of sense, that you jump on with somebody that's willing to kind of talk with you about it and help you understand the way things are working and miss those mistakes and whatnot, because otherwise you end up stuck with this, definitive that price definitely has to go lower in all the markets. And while it may, the truth is price only has to do whatever it's going to do. It never has to do what we think. It doesn't care what you think. It doesn't care what you feel. It doesn't care what your bills are or that you're down to your last dollar in your trade. The market doesn't care.
For sure. Yeah. The market does not care about you. It's just, like you said, right? It does not care if it is your last dollar. If you don't make this trade profitable, you're gonna lose everything, right? The market doesn't care. The market will wipe you out, and you do need expertise. You do need to lean on some mentors and learn from them. That's the only way to accelerate it. The most successful people of all times, they've all had some type of mentor that has helped them, guide them to that point, right? The people that have made it all by themselves, I'm sure there's some people out there that have made it without anyone's help. But those are exceptions. Those aren't the rules, right? So you shouldn't go guiding by, hey, I know this one guy, super famous, whatever his name is, did it all by himself. I don't need help. I'm going to follow him. That's an exception. You don't want to follow that. You're probably going to most likely end up like everybody else, hitting a lot of obstacles along the way and maybe never even making it because you took the harder path. So I am 100% a believer in mentors and learning from other people, surrounding yourself with people that are trying to achieve the same thing as you. So if you're trying to achieve to become a trader or a better trader than what you are now, surround yourself with traders. Get into communities, channels, whatever it is that are trader based. And those are the people you need to be talking to and hanging out with, as much as you can to learn from them. You are who you surround yourself with, and if you don't do that, you're not gonna succeed in what you're trying to do. So I 100% believe that, guys. One last time, go shoot him a follow. Texas West. Is it what was it? Texas West Capital, right?
Yeah, Texas West Capital. Yeah, capital as in money, as in your capital account.
His link is down below. His link is down below in the description. Make sure you click on it. Go ahead and subscribe his channel. Guys, great psychology. I love the psychology aspect, right? We do a lot of TA stuff here on the channel on Thursdays and Mondays, but we don't ever really talk about the psychology about things. So I've loved this conversation. It's been great. I'm definitely going to, we've already subbed to your channel. I'm definitely going to be watching a lot more of your stuff and really learning about psychology and how, how to manage, I do want to become a trader at some point. I need to do a few things in my life to be able to get enough time to sit down and be a trader. It's the only thing that's holding me back. But, the few trades that I have done, right? It's that battle, right? That emotional battle, whether I'm forcing a trade when I shouldn't be because I just want to make money that day, right? And then I end up losing or whatever, or I either get greedy or I get fearful, and I make a lot of mistakes, and they're all mostly, like you said, psychological, emotional things. It's not even about risk management because I'm not risking a lot of money. I know how to put in my stop losses, make sure I'm not losing money, but the decisions I make are all based off emotions, and that's where a lot of mistakes come from. So guys, like always, question everything, trust nothing, and until next time, hodl like it's hot. Go shoot my boy Chris a follow. Descriptions down below, guys. See ya.